What's up, everyone? It's Scotty with MoneyVest. So tomorrow is the big day for both Tesla and Netflix's earnings coming out. In this video, I'm going to go over the expectations. I've already done a couple of videos on Tesla going over EPS and revenue expectations, and the main focus and the main concern from Wall Street is going to be on margins and fourth quarter delivery estimates, not to mention 2024 estimates if Tesla is going to be providing that as well. So those are obviously going to be the main areas of focus, but I also want to talk a little bit about Netflix and what metrics investors are going to be focusing on. And of course, go over their guidance and the expectations, and of course, finish it off with some technical analysis. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. The link to our Discord and Patreon is going to be down below if you're interested in joining. There is a 16% annual discount that's available till the end of this month, and we'd love to have you on board. You get access to all the members-only private videos, trading view charts, our Excel spreadsheets, stock reports that you can view and analyze yourself as well. So links are going to be down below. So first, talking about Netflix. Netflix guided for the third quarter fiscal year 23 of about $8.5 billion in revenue with a 7.5% growth year over year, and operating income expected at just under $1.9 billion and operating margins of 22%, with net income of just over $1.5 billion with an EPS of $3.52. So those right there are the forecast from the company themselves. And if you come over to Netflix over here, you'll notice that the EPS expectations for tomorrow is at 348, so 348, so just under $3.50 per share, with revenues expected at $8.5 billion. That's quite comparable to what the company is also guided for. Now, this is going to be the main topic of discussion, which is the metrics right over here. That's your total paid memberships or paid subscribers on a global basis. 238 million is what the company has, and they have been growing that number very nicely at a modest clip of 3 to 4% year over year. So 220 million to 223 to 230, 232, and 238 is where we are, and 5.89 million additions on a net basis for the company in the last quarter. So we want to obviously see 1.5, 2 million for all the bulls out there. You want to see this number continue to increase. It's a cumulative number on a global basis. And of course, the higher the better. So that's going to be the main sort of a metric here. And then another one is going to be average revenue per user, right? So that's obviously a huge mix between different geographies that Netflix operates in. Of course, North America having the highest advertising revenue per user versus something in Asia or India, for example. So that's another number to pay attention to. And net cash provided by operating activities was 1.4 billion in the last quarter. No guidance provided. Free cash flow also, there's no guidance, but 1.3 billion last quarter. Before that, 2.1 billion. And they are going to be comparing to these numbers over here, which it's possible that they do see increases of over 60-70% in cash flows, operating cash flows, free cash flows, and not to mention that global paid streaming memberships could also be up another 7 to 8% on a year-over-year basis if you can see some nice additions. Third quarter is usually like modest. Fourth quarter is the strongest quarter for Netflix, which is exactly why last year, fourth quarter, 7.6 million net additions, and that was getting up to over 230 million subscribers. Now, this right here is the earnings expectations from the company for this year, 2023. They're expected to do just under $12 per share, and then growing that to over $15, then all the way up to $18. So the growth rate is pretty strong for Netflix. We're looking at, year-over-year growth of well over 18, 20, 25, 14% for the company, which is exactly why the price to earnings multiple continues to come down despite being very, very expensive at these levels. And revenue also expected to increase from $33.8 billion this year. It's about a 7% growth all the way to over $76 billion. And that's going to be in the mid-single digits to somewhat low double digits for the company. And price of sales is going to be a little bit under 5. Now, if you come over to the valuation, again, right now it is trading at a little bit over 30 times forward price to earnings multiple, and we're looking at a price to sales just a little bit under 5, and price to cash flow over 32 to 34. So those are pretty expensive valuations to begin with, and enterprise value to EBITDA trading at over 23 to 28 as well. So Netflix, as I've already mentioned, for me personally, it is a little bit more on the expensive side given the growth rate, the forward growth rates for the company. And this right here is going to be the entire technical analysis. And what you'll notice is a very nice consistent uptrend for Netflix, trading inside this uptrend here before obviously selling off and breaking down pretty aggressively. This happened in 2022, and Meta was in the same boat as well, but then had a very nice recovery of these higher highs and higher lows. But then up until recently, it had yet another breakdown below this higher low. And potentially that next support is going to be sitting roughly in the 280s. That's probably the most important support level to watch for Netflix. There's one more support where it has previously bounced off of a couple times. That's going to be sitting roughly at $314, $315 per share. So as it's now starting to sell off and pull back, that is going to be that next support. That range, that area is going to be very important at $288 to $314 per share. But at $300, and if they're expected to do $11 in earnings, that's 27 times PE multiple, which is actually quite reasonable for a company that is still a growth company, expected to grow earnings by over 20% over the next several years out. But I would be a lot more interested, for example, say at $250, where at $11 per share earnings puts us as roughly 22.7 times earnings multiple. So, $250 and even as low as $229. I mean, $230, $229 would be ideal for Netflix, but of course we'll find out if it ever gets down to that level, and resistance is going to stay put at 455. That's exactly where it got rejected before selling off and pulling back. Now Tesla, on the other hand, is making a very, very nice symmetrical triangle. So this right here is the lower highs and the higher lows, lower highs, higher lows, and it continues to consolidate and coil inside this chart. And I think it's going to be ready for a very, very massive move. And for Tesla, we have already, again, talked about the earnings expectations of well over 73 cents per share, with revenues of just over 24 billion. We already know the delivery numbers of 435,000 vehicles. That was up 28%, while also reiterating their number of 1.8 million vehicles. Now, this right here is the overall chart. Like I said, it's kind of hard to exactly pinpoint where Tesla's going to break out or break down to, but since there is a symmetrical triangle, and since the price is coiling inside this sort of symmetrical triangle, there is a higher probability that we see a much bigger move for Tesla very soon. Now, when it comes to the volume for options, these are 2-day options, so expiring on October 20th, so pretty much Friday. We do have a lot of call volumes sitting as much as $270, $280 strikes. So you'll notice that 270 to 280, we're looking at 40,000 contracts, another 24,000 contracts. We're looking at 34,000 contracts, another 32,000. So combined, we're looking at well over 125, 130,000 contracts sitting between 270 and 280. Not to mention 260 also has got 33,000, and 265 has got a little bit over 23,000. So we got lots of options, open interest here for Tesla calls on Friday. Lots of investors, lots of traders basically expecting a big move higher. So if you do the math here, we're looking at 32 plus 40. That's going to be 66. Yeah, that's going to be 40 plus 70. That's good. 71. 71 plus 150. We're looking at 120. Add another 8 for good measure. 121. And then add another 50, so 170, close to 180,000 contracts open interest between 260 and 280, right? And if you come over to the put volumes and open interest here, that's also quite comparable, but not as much, right? So 250 puts are sitting at $280. We've got 245 sitting at 12,000, 28,000 for 240, 14,000 for 235, another 29,000 for 230, and then 32,000 for 220. So if you do the math here for this one, 30 plus 30, we're just going to do 30, 30, 60, plus another 15, we're looking at 75, 120, 115, and then another 32, we're looking at 145. So the difference really here on a net basis, I would say that traders are more positioned on the long side here at close to 180, 200,000 open interest contracts here for the call options versus put options on expiring on Friday. The open interest is a little bit lower. So that's where we are with Tesla, with Netflix here. Tomorrow, they're going to really set the stage for big tech, and it's all going to come down to these two companies to kind of help us figure out, okay, where's the sentiment going? How is this earnings season going to look like in the fourth quarter? And of course, it's all going to come down to some of the other big techs as well. But bottom line is, these are the two companies to first look forward to. They're going to set the stage for the markets tomorrow. So hope you guys enjoyed this video and found it helpful. If you did, make sure you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. So always happy investing, and I'll see you all in the next video.